everybody. Welcome to a new episode of the Reinvent Money Show. I'm your host Paul Buitink, and my co-host today is Jan Willem Burgers. He's a lecturer and philosopher at the Vrije Universiteit in Amsterdam, and he's also a consultant over at Coin & Company. Hi, John.
Hi.
Our guests today are writer, comedian, actor of unrecognized genius, voice of many things, financial bot and anarchist Dominic Frisby. Dominic.
Hello.
Yeah, I copied the line from your Twitter, but I totally agree with the description. You're also, of course, your latest book or latest books were about Bitcoin and life after the state, about anarchy.
Yeah.
I thoroughly enjoyed those books. And our other guest is Ben Dyson, sitting next to Dominic. Hi, Ben. Ben is frontman of the UK activist group Positive Money, who wants to give the exclusive rights to print fiat money to the government. And today we're going to have an honest conversation about the pros and cons of purely state-printed money and whether anarchy and competing currencies is possibly a better deal. So let's start the conversation. Ben, could you first explain to our viewers what Positive Money is all about and what kind of problem you're trying to solve with it?
Yeah, well, we're looking at the connections between the banking system and the way the banking system works and the kind of big social and economic problems we have today. So things like household debt, the unaffordability of houses, inequality, the financial crisis that we had in 2008, which is really still going on. And we trace a lot of these problems back to the same, essentially, root cause, which is, as we see it, it's the way that the banking system is able to create money effectively out of nothing when they make loans. So I can explain that in a bit more detail if you'd like.
Yes, I think it would be good to explain it in a little bit more detail.
So if you ask people in the street, and you ask them the question, where does money come from? And they'll probably tell you it's the, well, depending on which country you're in, it's the Bank of England, it's the Federal Reserve, the European Central Bank. It's usually the national bank of that country that people will say.
A lot of people I talk to still think we're on some kind of gold standard, and we can only print as much money as there is gold, and there's gold to back all the money that exists. Well, people still think that.
We're way beyond that. We're way beyond the gold standard. It's amazing that some economists stuff think that. But so the key thing is basically most money is not actually created by the government at all. When people are thinking about money, they're usually thinking about paper money, so the stuff you have in your pocket. But the reality is 97% of money is just numbers in a computer system, and that 97% of all the money is actually created by banks.
Yeah.
And the way banks do this is quite a simple accounting process. When you go into a bank and take out a loan, that money isn't coming from somebody else's life savings. It's actually just simple accounting process, and they're effectively typing the money into the account. So the vast majority of money is created when banks make loans. Opposite process happens as well. So when you repay a loan, that money is effectively disappearing into thin air, essentially.
Yeah, and that specific thing is for many people a shock. Like the people think that banks, they take in money and then they lend it out, so they're like pure intermediaries, but they actually create money when they issue a mortgage loan or any other type of loan, and that's the thing that that most people don't know, right?
Exactly, and you'd be surprised, but a lot of economists don't really understand that either. And one, an economist called Dare Turner, who for about 5 years was the head of the UK's bank regulator, the Financial Services Authority. He's given speeches where he said, look, if you look at the textbooks that they're teaching university students with today, it tells you that a bank is there to take money from a saver and go and invest it in businesses. And that's completely the wrong description of what banks do. Because firstly, they don't take money from one place and lend it to somewhere else. They actually create new money when they're lending. Secondly, they don't lend most of that to business if they put it into the property market.
And the Bank of England has also confirmed that, right? That there is a lot of misinformation being spread in textbooks.
Yeah.
I think that's a really important point, is where this new money goes. And these are your numbers. But, I mean, also perhaps you should say them, but only, well, you described, so if you've got the percentage breakdown of where new money goes?
Yeah, so if you look at all of the money that the banks created in the 10 years before the financial crisis, so 1997 to 2007, these are UK figures, about 51% of it went straight into property. So residential mortgages and office buildings, basically. 31% went into the financial markets. So this could be trading financial markets, trading commodities,
leverage,
mergers and acquisitions, yeah, derivatives, all of this kind of stuff. 8% went to credit cards and consumer loans, so to buy cars and fridges and all that kind of thing. And it was only 8% that went to businesses outside of the financial sector.
Go one step back first, Ben. I think we should talk about indeed where the money goes, but just the educational thing, because I had an interview today with a Dutch professor, Arnold Heertje, and he is basically the author of one of the most important Dutch economy books for high schools for over 4 or 5 centuries. The guy's 81. And he's still very much very active, and he just published a new version of his book. And I read the part about money creation. It was described perfectly. And I asked him, has it been like this for all these decades? And he says, yeah, I always write it down like this. And he was basically in the 70s and the 80s, he was the only person basically providing the textbooks for Dutch high schools. So I guess in Holland, if I'm fair, it has been described in the right way. So is it more of a UK problem than you think, or is it because I think it's important to make the distinction, perhaps.
I was going to say, Paul, just to add to what you just said, I'm working on a new book about tax. So I've been reading all sorts of histories of tax recently, and exactly the problem that Ben described and that your gentleman that you interviewed described was going on 200 years ago. In the Napoleonic Wars, they still had this same problem that commercial banks were creating money. Now it's manifested itself in different ways now, and more money gets created. But it's basically a perennial problem in banking.
Yeah, and at least in Holland, at least in this textbook, it's always been described well. So, but he did recognize that quite a few authors and economists, they know how it works, but they think it's too sort of difficult to explain, and that's why they use the intermediary model, because it's sort of easier to convey the message in that way, because the creation process is a bit more tricky, and dumbing down of education, a lot of professors they choose the road of making it as easy as possible for people to understand, and then by doing that they basically don't describe the situation well. But I just wanted to make this qualification that perhaps in the UK it's worse than in Holland.
Yeah, well, I think it's the same in the States as well. It's basically, you speak to some of the older professors, they'll tell you that in the 60s people, understood money. It was one of the first things they taught on courses. And then in the 70s and the 80s, basically this new wave of neoliberal economics, neoclassical or monetarist economics came in. But a lot of these economists actually said money isn't that important, because if you just put it into the economy, it just causes inflation. That's the only effect of money. It doesn't actually affect what people do or how people live. Yeah. And the reality is that you can see how, if all the money goes into property, everybody jumps into the property market, housing becomes really expensive, inequality increases. So I think we're moving now back towards people understanding that money is a really important thing that affects.
Okay. Yeah, so let's go back to your previous point that the way money enters into the economy, it's very biased towards speculation and real estate.
Yeah, exactly. So that's the majority of bank lending now. So the majority of money creation is done to finance mortgages and also commercial property. So that's basically this idea that people have of banks investing in businesses. It's a tiny, tiny part of what banks do.
Yeah. All this new money is going into assets, be it financial assets or houses or commercial property. It's not going into Main Street. And the higher you push up asset prices, the greater inequality. So the money system, as it currently stands, creates inequality. It is the single biggest cause of inequality that there is in the world. And you hear all this talk about how to reduce inequality. We're going to do this. We're going to tax the rich. We're going to do that. Just fix the money system, because that is it. It is unaffordable asset prices that is the single biggest cause of inequality, and the money system causes that.
And so they've actually, in recent years, have probably made this problem even worse, right, with quantitative easing.
Oh my goodness, have they? Mm-hmm. Oh my goodness me! I mean, it's just been subsidy, quantitative easing, and zero interest rate policies, and all the other money meddling that's gone on is basically subsidy for banks and subsidy for a select few people who own certain assets, and also subsidy for older people who own houses, and people who have to pay that subsidy are the younger generation who don't own houses.
So what do you think, so I'm curious, what do you think central bankers think of this? Because they obviously must know all these things. So how do they view, what's their perspective on all of this? What is it that they're trying to do?
Well, he talks to central banks on a daily basis. He knows what they think. And I think a lot of, I do talks at certain economics groups, and there's, they're often quite kind of free market and free trade and all that. But there's often people from the Bank of England there. So there are people within those institutions that understand the consequences of their actions. But I just think there is a bigger machine in place that is beyond the power of a few individuals to stop or change the route of it. And it's this kind of subsidized asset owners at all costs mentality in the policy setting classes. And I think most politicians, and maybe even people in the civil service, are just thinking, get me through the next few weeks, get me through to the end of the year, get me through to the end of this electoral cycle. They're not thinking 20 or 30 years down the road. They're not thinking about the long-term greater good of their country or their city. Like, again, reading this history of tax, you look back at people in Greece, and people who lived in ancient Greece had to swear a legacy to their town that when they died, the city in which they lived in, they would leave that city in a better state than it was when they first came to the city. Now, that mentality does not exist in the policy setting classes.
So it doesn't exist among politicians, but people in central banks are elected for a long time or appointed for a long time, and I'm not sure that it differs in different systems precisely to combat this. So is the problem that they're not sufficiently independent from politicians, or what's the problem here?
I think it's always hard with central banks because what they can say publicly is very restricted. Because everybody, the markets and the papers analyze everything they say. So what they might be thinking about privately could be quite different. I know some of the central banks are doing research that might be along the similar lines to what we're working on, particularly looking at things like inequality and household debt and whether that's dangerous. But it's hard for them to say anything publicly. But I think one of the problems is they have been so busy basically firefighting, trying to deal with the last crisis, that it's quite hard for them to have the space to think about what to do in the long term.
In the long run.
I think that's one of the things we're trying to do, is say actually there's deeper, more fundamental problems that haven't been addressed. All of in the UK, all of the government inquiries and the independent inquiries into the banking crisis have been about how to make banks safer, but none of them have actually looked at how money is created.
Oh, absolutely. Yeah.
But your initiative has spawned a lot of similar organizations across the world. In Iceland, of course, it is already very much part of public debate. In Holland, we have Ons Geld, Our Money. They got more than 100,000 signatories, and it's being debated heavily within political circles. In Switzerland, we have the Volgeld initiative. We're actually talking to them tomorrow on the show. What is your objective now in the UK? Are you guys going to try to set up a referendum as well, or do you want? What are you going to do in the coming years? The UK political system isn't quite like the Swiss one, so we don't have referendums very often, and not for something like this. I think what we're trying to do in the UK is go through the political route, but to get
the people in power to understand that the system we have at the moment is fundamentally broken. It's not just about fixing it and hoping we can get through the next crisis. That we're trying to show them that there is actually really fundamental problems with the way that money is created, the way it creates all this household debt. The fact that since the financial crisis, we've actually increased the level of debt that people have by another, this is a global figure, but the level of global debt has gone up by about 40% since the crisis.
And how many politicians are already backing your case, and how many of them sympathize with you?
It's growing. It's still a small number. I mean, we did a survey last summer of 2014. We did a survey of about 100 MPs to find out how many understood that money is created by the banking system, and it was it was about 12% actually understood that. 71% said only the government is allowed to create money. So one of the things we've
71%.
Exactly, yeah.
Oh,
They think it's like that, or they say only the government should be the ones with the prerogatives to create money.
No, we asked them, is it true that only the government can create money, including the money in your bank account? And yeah, 71% said
wow.
yeah.
The ignorance.
I don't think it would be much better in the Netherlands or really any Western country, to be honest.
I have to say, it's really good, the job that they're doing, because this idea of money reform and private banks creating money, it is entering the conscious in a way that it wasn't 5 years ago. So you do see some of the kind of high-profile commentators in papers like The Telegraph and The Guardian.
Martin Wolf.
Martin Wolf talks about it, Owen Jones, there's a few people. So there are people that get it. So the more these guys get it, it gradually filters through. And on the right-hand side of politics, there are 2 or 3 guys in the Conservative Party. Douglas Carswell's in UKIP, Steve Baker, the guy who wrote that book on gold, whose name I've forgotten. And there's 3 or 4 who get the need for money reform on the right. I don't know about the need on the left. I guess McDonnell probably gets it, and then maybe 2 or 3 others. Yeah. But the research that Ben is doing, I mean, I use his research all the time in my books, and I have to praise you, the relentlessness, because I just kind of tear my hair out of just because you're up against a brick wall and you just keep on plodding away and chipping away at it. I mean, that takes time.
Yeah, kudos to Ben. I also I follow you guys closely, and even though I don't agree with everything, I love your enthusiasm and also how you explain banking 101 and how many people actually understand banking better because of your videos, because of your work. So applause for Ben in that sense. But of course, there's a few arguments that people use against. They say, well, first of all, it would lead to Zimbabwe-like circumstances if the government can print money. I know you're probably tired of trying to debunk that argument, but what's your answer when people tell you that?
Well, obviously, I mean, we would say you don't want to give the politicians who are trying to win the next election the power to print money, because they have the same incentive to overuse that power that the banks do. If you can create money and benefit personally from creating that money, you will create too much. It doesn't matter how good you are; those incentives are very, very strong.
Power corrupts.
Yeah. And so what we say is you need to make sure that power is with a very transparent, democratic, accountable body working in the public interest. Should be accountable to Parliament or to your elected representatives. It could be the Bank of England, it could be the central banks. Some of the central banks need some significant reform to be democratic and accountable, because they're not at the moment. But yes, you'd have somebody in control of creating money, or a committee, who's looking at the long-term interest of the economy.
If I may ask you, I mean, wouldn't that exactly make it a problem if they were accountable to the English Parliament? I mean, the English Parliament is filled with people who are there on short-term incentives, who are operating on short-term incentives. So wouldn't that create a problem for them to be accountable to them?
There's a committee. I'm not sure how it works in other countries, but in the UK, there's a committee called the Treasury Select Committee, which is members of Parliament, but from all the different parties. and they're responsible for questioning the Bank of England, the Treasury, like other financial institutions in the country, to basically to hold them to account. So it's not just one side of the political spectrum or the other. It's a kind of a cross-party group. And there's no perfect way of making sure that this power is used in the public interest, but there's much better ways than the way we have right now.
So what about creating a body of actual citizens who have some kind of role in this process as well? Some kind of veto power, make it more complex. Because this is probably the most significant power you could give to any group of people, right? The power to create money. So you've got to think of really the best ways that you can make sure that people aren't going to abuse that power if you want to go this route. So one thing you could do, which is very popular also in the UK, becoming more and more popular, to create citizen bodies that have a role in policy making processes and so on. Would you think that's a possible idea for this? I mean, this is not a new idea. You see this historically in in Florence, in Venice, in Rome, in Athens. You see these citizen bodies that have a role in the process. Do you think that could be a useful element here?
I think all these ideas are worth considering. I think you do have to make sure that the people who are making this decision are able to take unpopular decisions. Basically, that they can say, look, no, we're not going to create any money this year because it's the wrong thing to do for the economy. And I think if you say you were to randomly select people from the population, and everybody's thinking, well, if we could spend it on this or that, you then have this danger again that you could create too much. But it's tricky. But I think the main thing to look at is the incentives of the people who are creating money. As politicians, they have the incentive to create too much in order to win the election. If it's banks, they have the incentive to create too much to maximize their profits. So you have to kind of find somebody who isn't going to directly benefit from making the decision to create more money.
Why not do something like Jonathan McMillan proposes in The End of Banking, where you have an unconditional income that you give every citizen of the money system, and in that way the monetary base grows, but according to predefined rules that everyone can see, and it will not go to pet projects of politicians, and everyone then gets the benefit from the money growth to such an extent that the price inflation will remain close to zero. Is that something you guys are considering too?
Yeah, I mean, that's definitely an option. It's an option that a lot of economists are discussing now as well.
People's QE, basically.
It's often referred to as helicopter money.
Yeah.
But yeah, exactly. That way you'd avoid all the debates about what you spend the money on, because everybody will get to decide, and you can get that money out to people very quickly. So there is a whole debate about how to make the system work better, and there's a whole range of options there. I think the important thing is that people are talking about it.
Would you like to hear Dominic Frisby's idea for people's QE?
Absolutely.
Yeah, definitely. Yeah.
Don't tax people as much. Then they're all left with more money to spend.
Yeah, because that's interesting, Dominic. I know you as a staunch anarchist. I mean, you even have an A drawn on the whiteboard behind you.
Yeah.
I know that was you drawing that A. So you don't particularly like big government, right? So doesn't this sound to you like the ultimate nightmare, positive money?
It sounds better than what we have.
Okay.
The most important thing is that we have some kind of monetary reform. And by the way, I don't think we're going to get it. And even though we desperately need it, and here's why. Because if you're an entrepreneur, or you're a comedian, or you're a pop star or something, or an actor or something, you have to do something that makes you stand out from the crowd. You have to be this big, amazing guy, a flamboyant leader. Whereas if you work for a big organisation like the government or the civil service or the Bank of England, the way that you get to the way that you get on in those organisations is not by standing out, being a charismatic leader, saying things that people don't want to hear. The way you get on is by playing the game, keeping your head down, being like everyone else, but maybe just slightly better at. And so those organisations almost kill the very qualities that we need at the moment, which is strong, bold, charismatic leadership. And whether it's the political systems or the civil service, everything. So there just isn't anyone in politics or in the civil service or in the Bank of England who has the necessary strength and individual confidence to do what's required, to bring in the changes that's required. And that's one of the reasons why you're seeing this kind of rise of outsiders in politics, because people desperately want it.
Yeah, like Jeremy Corbyn or like Trump or...
Sorry. So, yeah, that makes me not very optimistic. But nevertheless, to answer your question, Paul, listen, in my opinion, the government here, I mean, we have one of the better governments here in the UK, historically, but worldwide, governments have an almost unrivaled track record in screwing up whatever it is they attempt to do. It almost invariably goes wrong, and every policy they make has some sort of unintended consequence, or backfires, or didn't do what it intended.
Exactly.
And often the successful ones are the policies that happen by accident. You know, they didn't mean it to do this, but actually they found it worked. And so the idea of a government planning and organising a money system is absolutely awful. But what we have at the moment is a kind of government-run money system that has been, it's what I would call, it's what somebody in The Guardian calls capitalist, but it's what I would call crony capitalist.
Yeah, or fascism.
Corrupted by a few vested interests. And that tends to happen to most things that the government does. The health service has been corrupted by vested interests. The transport, oh my goodness me, transport, it's been completely corrupted by, you know, people taking a government monopoly and then putting their own private interests on it. And it just, you know, that's why rail, so I think you either have to have something that is purely state or completely free market. But at the moment, we've got this kind of awful mix of the two.
Yeah, and I tend to agree with that. But then you could also, like I know you like Bitcoin, for example.
Fantastic.
Yeah. So because with positive money, as far as I understand, that would be the exclusive right to print money would go to the state, and that money would also be accepted for transactions with the government. It would be legal tender in that sense. But would you still allow for other currencies to coexist with the positive money?
Yeah. So Bitcoin would be allowed. Complementary currencies would be allowed. You know, other systems that are set up by communities and from the grassroots would be fine.
So it's quite Hayekian, what you're suggesting.
Maybe, but I mean, what we're saying is, if there's going to be a currency which is supposed to be risk-free, underwritten by taxpayers in the state, then only the state should create it. Because at the moment, what you have is a currency that is guaranteed by the government, underwritten ultimately by taxpayers, but we've allowed the banks to create it, and the proceeds of creating it go to the banks. The cost, when it all blows up, comes back on the taxpayer and citizens. The economy. So
it's like the worst of all. It's the worst of the state and the worst of private interests. I'll have one or the other, but not.
We've got the worst of all situations at the moment.
Yeah, so it's either communism, capitalism, or fascism, and right now we have fascism. So you prefer communism over?
Yeah, we've got commune fascism.
Yeah. Yeah. But and Ben, one other point, like a lot of people, and I think it's a valid criticism, say, well, in our current system, banks they lend money, they get interest, and they borrow money and they pay interest, because if they create the money, they also have to pay you on your deposit, even though these interest rates are very low, of course, now with the SERP. But the bank pockets the difference between the interest they get and interest they pay. You can also reduce that seigniorage basically by allowing more banks, by having a very competitive banking market with hundreds of banks, and everyone can start his own bank, and then in that way you can sort of give the seigniorage to the people to a certain extent. That's one argument that I hear against your solution, or as a to sort of counter with your argument that all the money now goes to the banks. What do you think of that? Is allowing more competition, is that already a solution that you're happy with?
I mean, the seigniorage discussion gets really complicated and really technical quite quickly. But in terms of the idea of just allowing more banks to come into the market and to compete, the problem is that they still all have the incentive to create more, because the more money they create, the more lending they can do, the more profit they earn on that, and the bigger they become. And they're all competing with each other to expand at least as fast as their competitors, because otherwise they're losing market share.
So the boom-bust cycle is still very much there, much more than in your system.
It's designed into the system, yeah. I mean, we're not saying that you would stop all financial crises, but you would smooth things out a lot.
Yeah, what about all the money that's being created in the shadow banking system? That's an argument that a lot of bank economists also make. For example, Rabobank, but also the authors of End of Banking. They say there's still the risk of all this shadow money being created in money market mutual funds and other non-bank entities. How do you respond to that one?
I mean, one way to approach that is to say, look, if you're creating money, if your business model means that you're creating money, then you are effectively a bank and you should be regulated like a bank. At the moment, if you look at shadow banking, a lot of these so-called shadow banks define themselves as shadow banks so that they could do banks. They could do banking without all the regulation of banking. So it's kind of a cheat. And there's a good argument to say, look, if you're going to have this ability to create money, you should be regulated like the firms that have this ability to create money. And obviously, we would say you should take that power to create money away from them.
Can we use gold and silver in your world?
Yeah, if you want to use gold and silver.
Okay. And how do we make the transition from where we are now?
There's broadly two options. One is to do it overnight. So there'll be a day where you stop banks creating money.
But preferably a Sunday.
yeah. And it's possible.
That is going to be a good night.
It's less radical at first. The other option is that you start gradually shifting this power between the banks and the state. And the way to do that is through some sort of people's quantitative easing, helicopter money, where the money is given directly to people. But at the moment, you have almost all money being created by the banks. And if you took this gradual transition, you'd have more money being created by the state. And then you'd probably increase some of the restrictions on banking to stop them creating as much money. Over time, you'd shift that power back fully over to the state. And
what happens to debts and obligations and everything else if you do the overnight thing?
Everything in those terms will stay as it is. It's kind of hard for me to explain without taking you through the balance sheet, so I don't think anybody wants to do an accounting course.
I love balance sheets, but I don't think we have enough time to go through that.
But just basically, you can do it. You can make it quite a gradual process. Okay. Even it's quick but smooth.
Okay.
So Dominic, if I
no.
Dominic, may I ask you because I sensed a bit of skepticism about the possibilities for monetary reform a bit earlier in your response. What do you think is the potential for you're very enthusiastic about Bitcoin. What do you think is the potential for these kinds of alternative currencies to really make a mark on our society?
Well, this is one of the things that makes me incredibly enthusiastic about Bitcoin. I know Bitcoin's having all these problems, these issues with the miners, and Mike Hearn's left, and everyone's arguing about the hash rate and all the rest of it. I just look at the black markets, and black markets have a long history of embracing new tech and making it work on a practical day-to-day basis quickly. They don't have deep pools of venture capital to fall back on. They can't borrow money. They have to make it work. And the online black marketplace is booming, and it is completely been made possible by Bitcoin. And the fact that ordinary people are using Bitcoin on a day-to-day basis to effect transactions, albeit illegal in many cases, but nevertheless they are using. They might be illegal, doesn't necessarily mean they're immoral. But the fact that this money is being used on a practical day-to-day basis shows me that it works. And if Bitcoin was going to die, it would have died by now. And it might be, yes, that something else is going to come along that's better than Bitcoin, that irons out these hash rate issues. But Bitcoin has blazed a trail, and we know that it works. and we know that people are going to use it. And that makes me very optimistic. I think over the next 2 or 3 years, we are going into a period of huge political turmoil. And we've got this Trump thing going on in America. I don't think Trump will win, but the fact that he's lasted as long as he has is very telling. But
I refused to take part in this debate, by the way. He didn't like the host.
Okay, well, yeah. But what we've got here in England, or in Britain, I should say, later this year is this Brexit vote, leaving Europe. And in all probability, I think we're going to end up voting to remain. But you just need to look at what happened in Scotland to see the kind of, even though the Scottish independence campaign lost by quite a large majority in the end, 55 to 45, the kind of change that referendum has caused there. Now, I think we will vote to remain in the EU, but in the event that we vote to leave, I think that spells the beginning of the end of the EU. And so that's going to usher in a whole period of, if England leaves, then maybe Greece, Portugal, Italy, maybe the countries from the bottom will drop out, maybe Germany will drop out, this migration crisis, the debt crisis, there's so many things going on. And, I think they're going to try and keep the EU going for as long as they can, but I think it's on its last legs. And if that goes, then we're going to be looking at new money.
Yeah.
Each country is going to have to be. Suddenly, there's going to be opportunities for new forms of
money. Yeah.
So you're looking at. I'm not saying it's going to happen, but there is a possible suddenly a meeting. Cometh the hour, cometh the man, and there might be. So that makes me very positive. But it's going to take a crisis. It's not going to be done with some charismatic leader going, "Look, it's broken. We've got to fix it."
And the current situation, currently the markets are not doing very well, and my guess is it's going to get much worse. What do you guys think about this?
I'll let Ben talk for a bit.
Okay.
Well, we haven't dealt with any of the fundamental problems. The things that led to the crisis in 2008 are the policies that we've used as the response to the crisis. So, we've got to get banks lending again. We've got to make it cheaper for people to borrow, encourage another housing bubble. So basically, we've kind of made things worse and more fragile. We've done the opposite of what we should have been doing. So now that's coming back to bite us. Really, it's kind of 8 years after the crisis, and now it's becoming apparent that the system really is fundamentally unstable. So it might require a crisis to make such a big change to the money system, and we might have that crisis in the year. There is also we're doing quite a bit of work on kind of smaller changes that would move us in the right direction. So things like allowing new kinds of banks to come in that wouldn't take risk with your money, that would actually just store that money at the central bank. We've been pushing for those kind of banks to be allowed in the UK.
Like I've been doing in Holland, the Postal Bank, where you have a bank that just takes in customer funds, stores it at the central bank, but it's not something the establishment is embracing. The central bank in Holland is basically saying, no, we cannot have a bank like that, or there's no applicable license available for a safe bank like that, even though it should be a regulator's wet dream, because there's not much to regulate. It's very safe, it's very simple, but really the central bank seems to be there to protect the existing fractional reserve banks, and the central bank doesn't seem to be eager to experiment with more stable systems or with more power for themselves eventually, because if the central bank decides to do people's QE or start to print digital cash, then the central bank can assume her old role as main printer, basically. But still, for some reason, central banks like to protect the cartel of big banks, and that's still surprises me sometimes.
Like central banks have always been really conservative. They always like to keep things as it is, really. And I think that one of the main ways to counter that, they won't change something unless they need to. And I think one of the things that we have to do is explain why they need to. Sort of drawing attention to the sort of dangerous levels of household debt, the problems with house prices being as high as they are, particularly in the UK, and really pointing out why this system is fundamentally unsafe.
Yeah, and you were saying more like small banks, and what are the other things you guys work on?
We're trying to get a greater understanding of the way that the system is causing all this household debt and unaffordable housing and inequality, really to kind of build the pressure for more significant reforms. We have a campaign in the Eurozone called QE for People.eu.
Yeah.
That's basically saying, look, the Eurozone is doing the same quantitative easing policy that failed in the US and the UK. And if it was to take some of that money and either give it directly to people or invest it in kind of public infrastructure, renewable energy, whatever is needed, the impact upon the economy would be so much higher and so much faster compared to what they're doing, which is just inflating financial markets and making some of that money.
Yeah, but that seems to be something that gets traction, right? Because Steve Keen, we had him on the show last year. He's one of the biggest advocates, I think, in the UK for people's QE. But I also think in a recent press conference, Draghi was challenged about this topic. Mr. Turning wrote about it in his book. So it seems like the stars are aligning for something like people's QE to eventually take place as an additional stimulus by the central bank. Do you think it's inevitable that we are going to see people's QE within, let's say, 2 to 3 years?
I think we'll see it somewhere, definitely. And there's some arguments that it's already happening. For example, the European Central Bank has been buying bonds from the European Investment Bank, and the European Investment Bank is going out and doing investment projects. So in a sense, it's already happening, but they don't want to admit that they're already doing it.
Or buying all the sovereign bonds of all the deficit countries, like the yields of the Italian bonds and the Spanish bonds are so low because of all the purchasing programs. So in a way, indirectly, that is of course a form of people's QE, but it's not directly targeted to the people, which would be better, I guess, than financing government deficits.
Yeah.
375 billion was the QE here, wasn't it?
That's right.
So 375 billion. How many noughts in a billion?
9.
Put you on the spot there.
Divided by 65 million. So it worked out about £6 per person.
Yeah, £6,000 per person.
And that includes kids. We take the kids out of that sum.
Yeah.
Then it's probably maybe 8 or 9 grand a person.
So what would you do with the money, Dominic? If you would get the money tomorrow, what would you do with the extra 10 grand? I don't think it would make a big difference.
Well, to me, it's nothing to me, mate.
Some people would save it. Some people would go on holiday, spend it in a different country. But on average, the total amount of spending that will come from that is significantly higher than the additional spending that comes from a proposal like quantitative easing, where you're expecting it to flow through the financial markets, through the bank accounts of the rich, and eventually to get onto the high street, main street, and in the real economy.
Trickle down.
Yeah.
Right.
Probably just pay a load of rent, maybe buy a car.
Yeah.
Take a holiday. Crap. It's just crap.
Yeah, nothing philosophical or like buying a few old manuscripts of Adam Smith or Karl Marx.
Yeah, I mean, really, what I should do is, buy an original copy of the tax code from 1688 or something. No, really.
Or maybe Henry George, one of your, he's one of your heroes, right? The land tax economist.
You should take 2 months off and go and write a fantastic book or something. That's how the best way to use them.
Well, so if we sort of wrap up, then it was very interesting and clear that what Ben explained about positive money. Dominic, you being an anarchist, I was expecting you to be sort of very skeptical about it, but you're basically saying, look, the system currently is so fucked up that this is actually a big step forward.
Yeah, my ideal world is the kind of Hayekian competing currencies.
Yeah, so you pay with the Frisby, and someone else pays with Bitcoin, and someone pays with gold, and
the market decide what the best money is, but this kind of corrupt mix of private interests exploiting government systems, which is what we have now, is the worst possible mix. And any kind of money reform, I'm repeating myself, but you know, Ben's system is I'm sure the government will manage to cock it up. That's the other problem, is if you think how long we've taken to learn what we know about money. Like, I've been reading about money for 10 years now, and I'm still learning every day. And Ben's put even more time into the study of it. You know, there aren't many people in the world who have that kind of interest, let alone knowledge. And then even when you've got that kind of knowledge, designing a system is that much. So there's very few people, particularly in government or in the central bank, who are actually capable of designing and implementing a new currency. So that's one of the biggest problems, is lack of engineering expertise.
Great. Well, Ben, maybe like a final question. What is the system, like the international cooperation you guys have? Because we have all these countries with their own initiatives, but I've been reading Stefan Zarlenga's Lost Science of Money the other day. It's a 700-page book, but I found some time on holidays to read it, and he's of the American Monetary Institute, but that is then something which is separate from your organization or from the international organization that you're a part of. How does the international coordination takes place? Because I think that what you guys are trying to achieve is something that ideally will be implemented in many different countries in order for it to work better. So how is that international coordination takes place, and what's your relationship with the American Monetary Institute?
So there's about, probably internationally, there's maybe 25 different campaigns now. And you can see most of them on the website internationalmoneyreform.org. So I've spoken at the American Monetary Institute's annual conference about 3 years in a row, actually, and we worked together a little bit on some of the proposals. So this is an idea that is spreading internationally. It can be applied in any country, really, because most countries around the world use the same basis.
Yeah.
You know, it's broken everywhere. And what we're trying to do really is help. You know, if anybody wants to start a campaign in their country, we try and help them to get that off the ground, and really, because it has to be a global change.
Like a franchise, sort of McDonald's, money McDonald's.
Hey, listen, Paul, there's a 100-year cycle in money. So at the beginning of the 16th century, we saw the emergence of people using notes to represent gold. Then at 1716, we had the first great recoinage. 1816, we had the second great recoinage. 1914, we came off the gold standard. Here we are 100 years later, rise of Bitcoin, money system falling apart, political chaos. There's a 100-year cycle in money.
Great time to be living this. Yeah, well, thanks. Ben, any closing remarks from your side, or maybe John, you have a final question or remark?
No, I think, well, maybe the one question that maybe never gets asked, which money system, so if you look at all the money systems around the world, is there any of them that you think, okay, that one probably works best? But I guess many of them work very similarly, so, but is there any country where you would say, okay, that one probably works the best?
I mean, there's good policies and bad policies in every country, and everyone's slightly different, but ultimately they've all taken the same system. I mean, partly because the British kind of invented part of this banking system. You know, when we had the empire, we exported it to the rest of the world. So I think if you look at most countries now, they have similar problems: high personal debt, high cost of housing compared to what people can afford to pay, growing inequality, financial instability, and we trace all that back to this root problem of banks having the power to create money. So we think that's the thing that needs to be changed.
What's happened with Iceland's money since the crisis? They're not really changing.
Well, Iceland, I mean, Iceland's recovering, but they're now looking into, the Prime Minister in Iceland commissioned a report into this idea of stopping banks creating money in Iceland.
But I heard stories about Venezuela and trying to implement positive money, but
I'm not sure. I don't know about that.
No. No, great. Well, thanks so much, Ben, for being on the show. Dominic as well. I think we're living in very interesting times, and like you said earlier, Dominic, it's this cycle that we're in right now, and with all these different types of theories and also tools like Bitcoin coming up at the same time. Yeah, something must break at some point in our current system, and then at least we have a few alternatives that we can use or try. So I'm very much looking forward to see these things mature over time.
Great. Thanks very much, Paul.
My pleasure. Talk to you next time.
Thanks, guys.
Bye.